This is Nightly Business Report with Bill Griffith and Sue Herrera.
Good evening, everyone, and welcome to this special edition of Nightly Business Report.
As you know, the stock market was closed today, as well as the Treasury market, in remembrance of our nation's 41st president, George Herbert Walker Bush, who died November 30th at the age of 94.
President Trump declared today a national day of mourning with an executive order closing the federal government.
In fact, the last time the market was closed to mark the death of a president was back on January 2nd of 2007 in the wake of President Gerald Ford's passing.
Indeed, and the nation's mood today was somber. The former president departed the Capitol building this morning, where his body had been lying in state. Family, friends, and dignitaries gathered for a memorial service at the National Cathedral in Washington. In the front row, Presidents Trump, Obama, Clinton, and Carter and their spouses. Eulogies were delivered by his son, former President George W. Bush, by former Canadian Prime Minister Brian Mulroney, former Senator Alan Simpson, and Bush's biographer John Meacham. His body was then flown back to Texas, where it will lie in repose until tomorrow, when a funeral service will be held in Houston.
During his presidency, the stock market gains were solid. That's the best we can use for that. The Dow rose 45% over those 4 years. The S&P gained even more, 52%. But the market gains were overshadowed by economic issues that continue to influence many of today's discussions. Whether you're talking taxes or banking or trade, President Bush's economic imprint is still being felt.
So help me God.
In 1988, George H.W. Bush was elected president, thanks in part to the low inflation and solid growth the nation experienced during the Reagan administration.
I am absolutely convinced I will be your next president. Thank you.
But 8 years earlier, during a failed run for the Republican nomination,
A voodoo economic policy.
Mr. Bush gave us the term voodoo economics, believing that the math behind Reagan's proposed supply-side tax cuts just didn't add up. Still, though, he served 2 terms as Reagan's vice president, and while campaigning for president once again in 1988, he defended those tax cuts with a promise.
Read my lips. No new taxes.
The Reagan tax cuts did leave President Bush with growing budget deficits. And so in 1990, he famously broke his promise, signing a tax increase that some economists believe contributed to a recession. And even though it ended in 1991, it still helped Bill Clinton win the 1992 presidential race, depriving Mr. Bush of a second term. Higher taxes and that recession prompted conservatives to revolt, and it caused a lasting divide that the GOP still copes with today. Bush also faced a banking crisis. Bad real estate loans put savings and loans out of business, and the Bush Treasury Department, which included a younger Jerome Powell, tightened regulations. Those fixes and spending cuts aimed at reducing deficits, while they were unpopular for many, are credited with helping to set the stage for the tech-led boom of the late 1990s. In one of his highest-profile domestic achievements, in 1990 he signed the Americans with Disabilities Act into law, requiring employers to provide reasonable accommodations to employees with disabilities. It also imposed accessibility requirements on public facilities. President Bush also engineered foreign policy wins. He oversaw a peaceful ending to the Cold War in 1989 and 1990.
America won the Cold War.
And he also put together an American-led 35-nation coalition that pushed invading Iraqi forces out of oil-rich Kuwait in 1991, sustaining the energy flow that powered the world's economy for decades. And there's still controversy about his decision to sign the first trade deal between rich and poor countries, the North American Free Trade Agreement, or NAFTA. The trade deal was later ratified by a Democratic Congress under President Clinton, and then criticized and eventually reworked by President Trump, who blamed the old NAFTA for American job losses. But for George H.W. Bush, the decision to sign wasn't about politics. As he did so often during his career in public service, he simply thought it was the right thing to do.
Let's talk more about President Bush's economic legacy with John Harwood. He is outside the National Cathedral in Washington, D.C. Always good to see you, John. Bill just kind of laid out the template of the Bush economic legacy, but of those various things mentioned, what do you think he will be best remembered for on the economic front?
On the economic front, I think it's that budget deal. And the last couple of years of his presidency psychologically were shaped by that recession. And that recession, by the way, began in the middle of 1990, before the budget deal, before the tax increase. And it actually ended a few months after the tax increase was enacted. However, it was a difficult step. It divided his party. He took the rate up from 28%, where Ronald Reagan had left it, to 31% in return for spending cuts. And that budget deal, although he did not get much credit for it at the time, and it was controversial, contributed to his defeat in his 1992 re-election attempt, set the stage for the surpluses that occurred later in the 1990s. It was followed by another budget deal that Bill Clinton enacted that also raised taxes. And by the end of the 1990s, we had a booming economy and a budget in surplus.
And what's interesting, is he the last president? I was hearing that where we had consecutive quarters of 4% growth or more, right?
This is the irony. Bill Clinton's campaign was, "It's the economy, stupid." The notion was that Bush had been inattentive to the economy. But in reality, when you look at the statistics, we were well out of the recession by 1992. He is the last president to preside over 4 consecutive quarters of 4% plus growth. That is remarkable when you think right now people are yearning to get back to 3% growth.
Right. Wasn't enough at that time. John, stay there. Let's bring in our next guest here, Barbara Franklin. She became the highest-ranking woman in the Bush administration when she was appointed as Secretary of Commerce. Madam Secretary, it's good to see you again. Thank you for joining us this evening.
Delighted.
And as fame would have it, you, maybe one of your greatest achievements as Commerce Secretary, you led a presidential mission to China to open up that market to American exports, something that we're dealing very much with today.
Oh, that's right. And President Bush was the one who had the idea of sending me to China. And to put it into context, if you remember the crisis at Tiananmen Square in 1989 in June, and we placed 8 sanctions on China, and I think President Bush very deftly managed that sanction regime so that we showed displeasure with what China had done, but we weren't going to mess up the relationship completely. However, anything economic really stopped after Tiananmen, and there was a ban on high-level government-to-government contact. And it was after the election, and this is after he had lost that tough election in '92. He called me the week after election and said, "I want you to go to Beijing, and I want you to meet with your counterpart to reconvene the U.S.-China Joint Commission on Commerce and Trade, JCCT, still meets. I want you to do that, and that will, in effect, restart the economic relationship between 2 countries that we really need to have this restarted." And he also wanted to smooth the relationship a bit, which had been at a really quite a low point. Mm-hmm. And then the other thing was, this would take away this ban on high-level government-to-government contact. And he thought the Clinton administration then would have a smoother way to engage with China and to keep this commercial relationship going if that sanction were removed.
Right.
And I'm happy to tell you, we didn't know how we were going to be received. We threw a mission together very, very quickly because we were going to go out of office.
Right.
The Chinese side delivered, and we brought back $1 billion worth of signed contracts between U.S. and Chinese companies.
It seems to me that the president doesn't get quite enough credit for really bringing in the concept of globalization. Because not only was your mission to China successful, but also the fall of the Berlin Wall, the beginning of a healthier economy in the now reunited Germany. There were a lot of economic things that were happening around the world that happened on his watch, and some of which, of course, like China, he started.
Well, he absolutely did. And I think on the China piece, people don't really understand what he did. And he paved the way then. My mission was just a piece of that process, paved the way for the great growth of the economic relationship between the U.S. and China, which has been the very bedrock of the foundation of that relationship today. Now, we're in a little bit of a rocky patch, but I have confidence that we're going to get somehow through that. But I don't think the president, of course, he never took credit for anything, as you said. He would. I don't think he gets credit for what he did with respect to that relationship, U.S. and China, which is a very important relationship globally, economically today too.
John, what we heard repeatedly during the memorial service today at the National Cathedral, he was a gentle man, but and he cared deeply about public service to the United States, didn't he?
Well, he also, Bill, was somebody who believed in the institutions of American government, and that's what I think is so telling about Secretary Franklin's anecdote about being sent to China after his election defeat. That was a very difficult campaign. I was covering his White House then. That was a very difficult defeat for him to stomach, but he ran through the tape. He was concerned about continuity after he left so that President Clinton would continue that dialogue with China. In fact, President Clinton did that. And China was admitted to the World Trade Organization by the end of his term. And that sort of encapsulated in that famous note he left on the desk of Bill Clinton that Bill Clinton found on his first day in office, where he said, Bill, you're the president now. I'm rooting for you. Your success is America's success. I think that reflects the ethos of George H.W. Bush.
Madam Secretary, do you want to weigh in on that? I heard you a little bit in there, but he really has a remarkable legacy, does he not? Well,
he really does. And some of this shows his quality and strength of character. He could be tough-minded and decisive when necessary, but he was always gracious and kind at the same time. And this is leadership to me. And what he did with respect to getting the China-U.S. relationship back on an even keel was leadership. And that is what presidents do. And he did it without seeming to be doing anything sometimes. Made it look effortlessly, but did. Great quality of this man. I am honored to have served, and I'm honored to have known him and Barbara Bush for 40 years.
And we are pleased that you're with us tonight as well. Barbara Franklin, the former Commerce Secretary, and our own John Harwood joining us as well. Thank you both, folks.
Yeah, thank you.
Still ahead, the day in business news and the surprise hidden in the latest report from the Federal Reserve.
A massive pharmaceutical acquisition was approved as well. Takeda shareholders okayed that $59 billion takeover of Shire. The deal creates a global drug powerhouse and pushes it further into the rare diseases industry. It's the biggest overseas acquisition by a Japanese company, but it also adds to the pharmaceutical company's debt load as well.
To the economy and the housing market, which saw mortgage applications rise 2% last week. According to the Mortgage Bankers Association, volume was nearly 20% lower, though, than the same week 1 year ago. Experts say the 3-week decline in mortgage rates is not enough to get buyers back into the market in a notable way. And one reason is that prices remain high and affordability is at its lowest level in a decade.
Meanwhile, the Federal Reserve's latest survey on the economy was released this afternoon, and it pointed to modest to moderate growth through late November. But there was also a surprise. Steve Leisman joins us now. What was the surprise?
Well, it started off modest to moderate growth the way it has, I don't know how long going back. But then it kind of quickly transitions into this discussion of slower growth. And we really haven't seen much of it. In fact, 4 districts report either slight or slower growth compared to the prior beige book, which is the collection of economic anecdotes from the 12 Federal Reserve districts that comes out every 6 weeks or so. And it said that while firms remain positive, the quote was in there, optimism has waned. And that was a kind of dour note in this book that's been generally sort of upbeat and they noted tariff uncertainty, rising rates, and labor market constraints.
In fact, tariffs were mentioned 39 times.
39 times.
Told.
We've been tracking this number. It was 0 in January, and it ramped up to 51 in the prior report, and now it's still a very elevated 39 this time. The word slow, 43 times.
Does that change anything in terms of what the Fed does on rates? The language has changed. We're seeing tariffs more frequently.
I think that's a direct question that I want to back up a little bit before I answer. And I think the first thing is there is some evidence here for those in the market who are betting on or now believe that U.S. growth is slowing down. I don't believe the report at this point is as dour or as downbeat as some of those have said. I do think that if the evidence of the slowing continues, for example, in the Friday jobs report, we get the ADP number tomorrow that gives us a heads up on what might be in the jobs report. If that happens, and if we tend to get a generally downbeat outlook from the economic data, certainly 2019 is in question, but we might be on the cusp. A few more 800-point down days in the Dow, which I'm not hoping for, but that could change the outlook even for December.
All right. Well, we'll see how the market responds to this beige book report when we open again tomorrow. Thanks, Steve.
Sure.
Steve Leisman joining us.
Indeed, we will, because as Steve just mentioned, the financial markets are closed today and getting a bit of a breather after that almost 800-point plunge. So what's next for stocks? We're joined right now by Brian Jacobson, investment strategist at Wells Fargo Asset Management. Brian, thanks for joining us. Nice to have you here.
Thanks for having me.
All right, so we don't have trading today. We had an almost 800-point plunge yesterday, and now we have the beige book. What's your best guess of how the rest of this week is going to play out?
Well, it's probably going to be a pretty bumpy week. The beige book was a lot more negative than what I was expecting it would be. Now, kind of in a weird way, investors might like that because it suggests that the Federal Reserve can be patient with hiking rates. Maybe they can hike in December and then take a pause. But the fact is that economic growth has been slowing. And that is, I think, a major change from where we were even a year ago when everybody was talking about synchronized global growth. And now it's more about synchronized slowing and how much slowing will we get. It seems like we're having a lot of issues with optimism of business executives related to tariffs. And that's one of the reasons why this whole tariff situation between the U.S. and China is so important.
Two other events we've got later this week that will have big market impacts: the OPEC meeting and then that jobs report that Steve was talking about. So that could add to the bumpiness. What are your expectations there, by the way?
Well, the OPEC meeting, they did have a preliminary meeting today, and it seems like Russia is going to go along with some production cuts. And so the meeting tomorrow might finalize that as far as the details around it. So we could see oil prices rise in the wake of this OPEC meeting. And then with the jobs report, it seems like the consensus is around about 190,000 jobs, wage growth of around 3.2% year on year. Those are good, solid numbers, probably above trend numbers. Now, I think that the danger is that with the beige book, the indicators there that maybe it's going to be a little weaker. And so we could be in store for a little bit more volatility as we enter into and get further through the holiday shopping season here.
We also saw in the beige book wage pressure continuing and the labor market extremely tight. Might we see some of that reflected in the Friday report as well?
We could see wages rise. I think the expectation is around a 3.2% increase year on year, which is a slight pickup from the 3.1% that we had for October. Now, from a historical perspective, that's really not that bad as far as an increase in pressure. If we have about 2% inflation, that's about 1.2% real wage growth. And honestly, we could do a lot stronger than that before I think that it would actually become a problem. But, you know, traders are always looking at what is this telling us about what's going to happen next year, not what's just happened last month. So it could be pointing to a little bit of a buildup of pressure, but my expectation is that it's going to be pretty steady as she goes here.
All right. On that note, Brian, thank you so much. Brian
Thank you.
Jacobson with Wells Fargo Asset Management.
And as we mentioned, OPEC is meeting in Vienna tomorrow, and the stakes have never been higher for that oil-producing cartel. Brian Sullivan has a preview of what will be an important and possibly contentious meeting.
What a difference a few months make. OPEC not only facing falling oil prices, but perhaps the beginning of the end of its cartel. In June, OPEC agreed to raise production. It was a move to counter rising prices and the threat of lower supply from oncoming Iran sanctions. But it miscalculated and was caught in the crosshairs of two trends. Iran has still been able to sell oil around the world, and the United States and Russia continue to boost their production.
I can't stress the importance of what's happening in oil right now, a one-year low.
Prices crashed in November, posting their worst month in more than a decade. President Trump loves it, tweeting recently that lower gas prices are a big tax cut. But our tax cut is a profit tax on OPEC. And it not only has to figure out how to deal with Trump and the United States, but also a break in its own ranks. This week, the country of Qatar shocking everyone, saying it is quitting the cartel because it wants to focus on natural gas instead of oil.
Our intention to develop a new gas project for export.
At Thursday's meeting, OPEC expected to cut production, likely by about 1.3 million barrels of oil per day. But the markets will be paying attention to what happens on Friday as well, because that's when the Saudis meet with non-OPEC member Russia, what some cynics call the real OPEC meeting. So between expected cuts, Qatar cutting and running, and the continued rise of the American oil juggernaut, it could be a contentious couple of days in Vienna. For Nightly Business Report, I'm Brian Sullivan.
General Motors CEO was on Capitol Hill today for 2 days of meetings. Mary Barra met with the 2 senators from Ohio, and tomorrow she's scheduled to meet with Michigan lawmakers. The meetings revolve around that automaker's decision announced last week to close 4 U.S. plants and lay off thousands of workers. Phil LeBeau joins us now with more on that story and others. Good to see you, Phil. So what is she telling these officials, and might these meetings change her plans to close some of those plants?
I doubt they're going to change General Motors' plans. I think General Motors looks at these plants and they say, look, these are wildly underused plants in terms of how much unused capacity is there, and we need to make this decision for the good of General Motors. Having said that, Mary Barra has been called to Capitol Hill in the past, and sometimes she has done well, sometimes she has not done well. She realizes, and General Motors realizes, it needs to listen to the lawmakers in those states where the plants are closing or will be idled. At a minimum, they have to say, we understand your concerns. What can we do perhaps in the future to make some investments there? But I wouldn't expect any kind of commitment out of these meetings.
All right, while we have you here, well, let's talk about driverless cars for a moment. Google's company, Waymo, is launching an autonomous rideshare service. So how soon do you think before we see driverless cars giving rides around the country?
Oh, it's a long ways off, Bill. I think what you're going to see is a gradual expansion of the Waymo One autonomous rideshare service. Gradual, starting in Phoenix. Maybe eventually they move up to the Silicon Valley. And then over time, you will start to see them slowly show up in other cities around the country. But I have to be honest with you, I would not expect this to be replacing Uber anytime soon. We're many, many years down the road before you and I here in Chicago or in New York are calling up Waymo and saying, hey, I need this car to come pick me up.
Before we let you go, the airlines, Hawaiian Airlines cut its revenue outlook. Is it specific to them, or are the airlines overall slowing down?
No, it's more specific to Hawaiian Airlines and some of their issues, and I wouldn't even call them issues, but specific to their service within the islands in Hawaii and the routes that they're flying there. Mm-hmm. The industry overall, Sue, a lot of the analysts who have looked at the numbers have said, look, we're going to have to raise our revenue projections for the airlines overall because they're doing better with things like bag fees, reservation change fees.
Right.
The revenues are improving. So this is more specific to Hawaiian than to the industry overall.
Phil LeBeau in Chicago. Thanks, Phil.
You bet.
Elsewhere, Glassdoor is out with its list of the best places to work. The survey is based on the input of employees who voluntarily provide anonymous feedback about their job. These are the top 3 companies right now. Management consulting firm Bain & Company tops the list, followed by Zoom Video Communications, a video conferencing company, and a favorite of ours, In-N-Out Burger, rounds out the top 3. Coming up, President Bush and his love of fun, colorful socks. Earlier this year, we aired a story about a young man named John Cronin who, along with his dad, started a company that makes socks. Now, John has Down syndrome, and to him, the socks represent a lot more than just things to wear on your feet. The bright patterns allowed him to spread happiness, awareness, and fun. And it was through a mutual love of colorful socks that John Cronin's friendship with Bush 41 began. NBC's Harry Smith looks at the lighter side of President Bush's legacy as an unlikely fashion trendsetter and friend.
For a man who was averse to adulation and attention, George Bush sure did want you to see what was on his feet.
I like a colorful sock. I'm a sock man.
The more colorful, the better, though his preference leaned to red, white, and blue. Entrepreneur John Cronin of John's Crazy Socks took notice and sent the president a box of some of his favorites. Soon, on World Down Syndrome Day, the president wore these socks that John designed. John's George Bush socks are sold out today. That he was often in a wheelchair the last several years, all the better to show off the socks. And if a fellow former president was stopping by for a visit, Clinton socks. When Sully the service dog came on board, he often co-starred on Instagram with the socks and was with the president when he went to vote a few weeks ago. And there was Sully, dutifully at the president's side, even after he passed. The president will be buried in these socks in homage to his service in World War II, jets in formation, and the naval aviator's wings. Safe flight, Mr. President. Harry Smith, NBC News.
And thank you for watching this special edition of Nightly Business Report. I'm Sue Herrera.
I'm Bill Griffith. Have a wonderful evening. We'll see you tomorrow.